Vice Chair Barr expressed a desire to assess how the Federal Reserve performs analysis on bank mergers. This follows President Biden's call for DOJ and the agencies responsible for banking to update guidelines on banking mergers to provide more robust scrutiny of the mergers. We strongly believe antitrust analysis should be governed by the rule of law and not by the individual views of those who, at any particular point in time, head the relevant agencies. So, I'm concerned any change to that analysis that would depart from long existing and widely accepted standards may not reflect actual changes in the competitive environment. A functioning bank system must allow stronger regional banks to be able to acquire those in a weaker position. Mr. Becker, do you believe the current hostile environment towards mergers played a role in your bank's failure?
Congressman, that's not an area of expertise that I have, so I don't know the answer to that question.
Mr. Shea, would you like to respond to that?
I don't think the regulatory merger policy had anything to do with what happened to Signature Bank. I thought we were in a position to continue after the March 12th, March 13th. I thought we had a plan in place, a well-reasoned, solid plan in place that would have brought Signature Bank to exist today and continue to serve its customers without any merger from anyone.
Very good, Ed. A November 11th, 2022 Wall Street Journal article explained at length interest rate risks presented to the banking system by the Fed's inflation-fighting rapid increase in interest rates, kind of an article that's been referred to hundreds of times now in this committee. Silicon Valley Bank was mentioned as a particular case with, as of September 30th of 2022, a market value of its held-to-maturity bonds just slightly above the value of its total equity. So clearly, regulators should have been becoming aware of the risks surrounding Silicon Valley Bank. So back to you, Mr. Becker, if the uninsured depositors had not forced the bank to close with this mini rush, how much longer do you believe the regulators would have allowed Silicon Valley to continue before intervening at all?
Congressman, I don't know what the regulators would have done. I can't speak for them.
Well, let me ask it a little bit different way. Were you working in concert with them, with the regulators, and was there a back and forth with the regulators that would have maybe laid out the case that there are some serious issues emerging related to Silicon Valley Bank?
Congressman, as stated in my written testimony, we were very responsive to the regulatory feedback. Regulators at the FDIC and the Fed and the state.
Okay. The issues with SVB were pretty well known in the days leading up to the failure, right? However, Signature's failure came as a surprise announcement. So to Mr. Shea, at what point was it clear to you that Signature Bank could not last without some type of intervention?
I believed that they had Signature Bank on Friday was sufficiently capitalized. It was well solvent, well diversified. It had a strong securities portfolio and had $29 billion pledged at the Federal Home Loan Bank and Federal Reserve. I fully expected Signature Bank to continue on, and I fully thought that the plan that was presented for financing against good collateral at Signature Bank would have allowed it to continue open successfully on Monday and be still serving its customers, its middle market customers, its customers today.